Welcome to LexTalks, Legal Topics Simplified. We break down complex Indian legal issues, making them clear for everyone. Today, we're diving deep into something super relevant for all you future lawyers out there.
Oh, yeah. What's that?
It's nationalization vis-a-vis privatization, evaluation control on management, and accounts by government, specifically in the Indian banking industry.
Ah, interesting. That goes way beyond simple banking rules, doesn't it? It really shows how India's economy and politics have changed over time.
Right, and it sparks a huge 80 debate about what the government's role should be in finance. So let's rewind a bit. We're talking post-independence India, correct?
Yep.
What was the economic strategy back then?
Okay, so post-independence India adopted what's called a dirigist model.
Dirigist.
Yeah, it's French. Basically, think of the state as a conductor leading the whole economic orchestra.
I like that analogy.
It was deeply involved in investments, regulations, and controlling major industries.
So not exactly a free market then. Why did India choose this route?
Well, just out of colonial rule, there was a strong push for self-reliance, breaking free from dependence on foreign capital.
Makes sense.
The goal was to forge their own path to economic development, protecting domestic industries, especially agriculture and small businesses.
Interesting. So was this about setting up a socialist system?
Not quite. It's more nuanced than that.
Okay.
While there were some socialist ideas in there, the main goal was actually building a distinct form of capitalism. Imagine it like a hybrid.
A hybrid.
Yeah, blending state intervention with a growing private sector.
Ah, I see. I bet that sparked some debate.
Oh, absolutely. Especially those leaning left argued this hybrid wouldn't last. They thought it would inevitably become classic capitalism.
And looking back, it seems like they might have been right.
It does seem that way.
But for now, let's zoom in on a crucial moment in Indian banking, 1969. Why did the government decide to nationalize the major banks?
Nationalizing those 14 major banks was a huge move. They had a mix of social and economic goals driving that decision.
Like what?
One big one was redirecting credit to sectors that were vital for national development: agriculture, small businesses, and export-focused industries. They wanted to make sure even those usually left out of traditional banking could get access to credit.
So expanding financial inclusion, especially in rural areas.
Exactly.
So it was a bit like Robin Hood, taking resources and giving them to those who needed it most.
You could definitely see it that way. The idea was to democratize access to financial resources.
Did it work, though? Did nationalization actually deliver on its promises?
It definitely reshaped the entire financial landscape in India. One of the biggest successes was that wider distribution of credit, especially in rural areas where it was really limited before.
That's great.
But of course, it wasn't without its critics.
Right.
Some argued that nationalization led to inefficiencies, political interference in how the banks were run, and a lack of drive for innovation and growth.
Interesting.
There were studies showing that these nationalized banks weren't as proactive in expanding their reach, attracting deposits, or making lending decisions.
It sounds like the classic debate. Government efficiency versus private sector dynamism.
Yeah, exactly.
So did nationalization, while trying to achieve these social goals, accidentally hold back the banking sector from being more efficient and competitive?
That's the million-dollar question. It's a really complex issue. There's no easy answer.
So let's shift gears a bit and look at what sparked this move towards privatization. What caused this change in approach?
Well, several things came together to push privatization globally, and India wasn't an exception.
Okay.
You see, in the 80s and 90s, neoliberal economic policies really took off. They championed free markets and minimal government intervention.
Ah, the reign of the free market.
Right, and the argument for privatization was that private ownership would boost efficiency, bring in better management, and create a much more dynamic and profitable banking sector.
So more innovation, more capital, a smaller government sounds good at first glance.
It does, but remember, this isn't just theoretical. It plays out in the real world with real consequences. We can't just ignore the potential downsides.
You're right. What are some of the concerns people have with privatization?
One big worry is that private banks focused on profits might neglect those priority sectors,
Oh, I see.
leading to, you guessed it, financial exclusion for certain groups. Remember, that was one of the main reasons for nationalization in the first place.
Right, to ensure everyone has access.
Exactly. So we risk going backwards on that progress.
And didn't we see private banks failing, like with Yes Bank?
Absolutely. That's another worry. Private banks might be more vulnerable to failure.
And when private banks fail, don't taxpayers end up bailing them out? Doesn't that go against the whole idea of reducing the government's role?
Yeah, it does raise questions about who ultimately foots the bill when things go wrong.
Okay, this is getting complicated. With all these arguments back and forth, is there a way to measure which approach has been more effective? Nationalization or privatization?
Researchers have done a lot of studies trying to compare the performance of nationalized versus private banks in India.
And what have they found? Give us the inside scoop.
One study used a method called data envelopment analysis, or DEA, to figure out banking efficiency. It's basically a tool to see how well banks use their resources, things like assets, deposits, and loans.
So it's like comparing apples to apples in terms of performance.
In a way, yeah. And the results? Well, private banks generally did better when it came to efficiency and profitability.
So does that mean privatization is the clear winner?
Hold on. While private banks, on average, performed better, remember that performance can vary a lot between individual banks, regardless of who owns them.
You mean some nationalized banks do well and some private banks do poorly?
Exactly. There are well-managed public sector banks and poorly managed private banks. It's not so simple.
Gotcha. So ownership isn't the only thing that matters. But what about lending to those priority sectors? That was a main goal of nationalization, right?
It was, and this is where things get even more interesting. Evidence suggests that nationalized banks did play a crucial role in getting credit to those sectors: agriculture, small businesses, rural areas.
They delivered on that promise then.
Largely, yes. But here's the thing. Some studies suggest that private banks have actually been stepping up their lending to those sectors as well recently.
Really? So that could ease some concerns then, right?
It could, but we need to figure out if this trend will continue or if it's just a temporary thing because of regulations or market opportunities.
So we need to keep an eye on it.
Right. Constant monitoring and adjustments are key. It's an ongoing process, and it really highlights the need for a strong regulatory system that encourages responsible banking.
Okay, so we have this constant back and forth between nationalization and privatization, each with its own pros and cons.
And as we've seen, there's no simple solution.
What really stands out to me is that context matters. What works for India might not work for another country. The timing, the implementation, the regulations, it all plays a huge role.
You're absolutely right. We need to approach these debates with nuance, understanding the history, the specific challenges, and the potential trade-offs involved.
So, no rigid ideologies, just careful analysis of the facts, and a real commitment to finding solutions that actually work.
Exactly. That's what makes this such a fascinating and ever-changing area to study.
I feel like I have a much better grasp on the complexities of nationalization and privatization in India now. But before we move on, I have one more question.
Okay, shoot.
Given all these debates, where do things stand in India today? Is the government leaning towards more privatization? Are there any alternative models being considered? What's the future of the Indian banking sector?
That's a great question, and it's something that a lot of policymakers are discussing right now. Let's dive into the current situation and potential future scenarios right after.
We explore this fascinating topic even further. Don't go anywhere. We'll be right back.
You know, one thing that always gets me thinking about this debate is this whole performance paradox.
A paradox.
Yeah, you'd think with all this talk about efficiency and innovation, private banks would be way ahead, right?
Yeah, you'd think so, right? Like they've got this secret sauce for success or something.
Well, it's not always that clear-cut. While some private banks definitely do well, the overall picture is a lot more complex. You see, when we start looking at bad loans, what they call non-performing assets or NPAs, that difference in efficiency between private and nationalized banks, it kind of shrinks.
Wait, so are you saying private banks might not be as great at managing risk as they make it seem?
It's not necessarily about being good or bad at it. It's more about, like, the incentives involved. Private banks are often chasing those profit targets, right?
Right.
So they might be more willing to take on bigger risks.
It's that whole high risk, high reward thing, right?
Yeah.
But then there's also a higher chance of things going, well, not so well.
Exactly. And when those risky bets don't pay off, it often ends up being the public who has to bail them out.
So much for that idea of the perfect private sector.
Right. It just shows that no system is flawless. Both nationalized and private banks have their good points and their bad points. The real trick is finding that balance
Balance between
economic efficiency and financial stability. And, of course, social responsibility.
It's a tough act to balance all that.
It is.
You know, we've been really focused on what's been happening in India, but this whole debate, it's not just us, right?
Oh, absolutely not. This nationalization versus privatization debate is a global thing. Countries all over the world have grappled with this issue. And the results, well, they've been all over the map, depending on the context and how they implemented the reforms.
Any interesting examples from other countries come to mind?
There's this one case study that really stands out from a country going through a major economic shift. Their study found that privatization did boost banking efficiency and profits. But there's a twist.
Ooh, I love a good twist. What happened?
The study stressed the need for strong oversight, even with those efficiency gains. It's crucial to keep things in check, to prevent too much risk taking and make sure things stay stable.
So it's not just a simple switch from public to private then?
Nope. The success is all in the details,
Yeah.
how it's implemented, the regulations, all of that.
It makes you think. We've talked so much about efficiency and profits. But what about the human side of things? How do these reforms actually affect people's lives, especially those who really rely on basic banking services?
That's the core issue, isn't it? It's recognizing that banking has this whole social dimension. It's easy to get caught up in those economic numbers, but we can't forget that real people are impacted by these choices.
Right.
We have to understand how privatization affects things like financial inclusion and fair access to services, especially for vulnerable groups and people in rural communities.
How do you even measure something like that? So are there studies that go beyond just the financial numbers?
Researchers are starting to look at the social impacts of privatization more and more. One study really dug into priority sector lending, which is a big part of India's development goals.
Right, making sure credit is available for those who need it most.
Exactly. That study found that while nationalized banks have been the main players in priority sector lending historically, there are signs that private banks are starting to do more in this area too.
So maybe even with privatization, those social goals can still be met.
It's possible, but we've got to make sure this isn't just a short-term trend because of regulations or market changes. It needs to be sustained.
So it needs constant monitoring and evaluation, right? Tweaking things as we go.
You got it. This whole thing emphasizes the need for a regulatory framework that pushes for responsible banking, making sure social goals aren't thrown out the window just to chase profits.
Okay, so we have this constant tug of war between nationalization and privatization, each with its own set of advantages and disadvantages.
And as we've seen, there's no easy answer. It's complicated.
What I'm really taking away from this is that context is key. What's best for India might not be the best for another country. The timing, the implementation, the specific regulations, it all matters.
Couldn't have said it better myself. We need to approach these debates with nuance, understanding the historical context, the particular challenges, and the potential compromises we might have to make.
So no rigid ideologies then, just a careful look at the facts and a real commitment to finding solutions that truly work for everyone involved.
Exactly. That's what makes this such a fascinating and dynamic area to study.
Okay, so let's talk about this privatization push. Is it all about economics or is there more to it?
Well, the government's goals are, they're pretty complex. They say privatization will bring in much needed capital for these banks, boost efficiency and make them more competitive globally.
So we're back to those core arguments for privatization again. More efficiency, more capital, and less government involvement. But, as we've discussed, it's rarely that simple.
Right. There are definitely concerns about things like, potential job losses and the impact on financial inclusion, especially for those in rural areas. And there's the risk that if the private sector becomes too dominant, those social objectives might get sidelined.
Yeah, true. It's a tough balancing act for sure. What's been the reaction so far to these privatization moves? I imagine not everyone is thrilled.
Oh, there's definitely been pushback. Trade unions, some political parties, and parts of civil society have been quite vocal in their opposition. They argue that privatizing these banks undermines the vital role public sector banks play in meeting the needs of everyday people, especially in those rural areas.
So the debate continues. But, looking ahead, what are some possible scenarios for the future? Is full-scale privatization inevitable?
Well, it's always hard to predict the future with complete certainty.
Of course.
But there are a few paths this could take. One scenario is that we just keep going on the current track. The government gradually decreasing its stake in public sector banks, leading to more and more private sector involvement.
And what would that mean for the overall banking sector, in your opinion?
It would probably result in a banking sector that's a lot more market-driven. There'd be a stronger focus on profits and efficiency. And this is but it's super important to have really strong regulations in place to prevent things like excessive risk-taking and to protect consumers, make sure they're not being taken advantage of. And we need to make sure we don't end up with monopolies.
So privatization but with a safety net.
Exactly. Another possibility is a more, I guess you could call it a hybrid approach, where the government holds on to a decent chunk of ownership in some key banks, but also lets the private sector have a larger role in others.
So kind of like a best of both worlds situation.
Yeah, something like that. It could be a way to maintain some level of social control while also taking advantage of the dynamism that the private sector often brings. And then there are those who are suggesting we explore completely different models altogether, things like cooperative banking or community-owned banks.
And that's interesting. Tell me more about those.
Well, you see, cooperative banks, they're actually owned and controlled by their members. Usually it's local communities or specific groups with shared interests. This model really puts an emphasis on social responsibility and local economic development.
So it's more about putting people before profits then.
To an extent, yes. Obviously, these models have their own challenges, but they do give us a different way of thinking about how banking can be structured to really serve those broader societal goals.
I like that. It's exciting to think about all these different possibilities. It sounds like the future of Indian banking is still very much in flux.
It is, and that's what makes it such a fascinating and important area to follow. The choices we make today are going to have huge implications for India's economic and social development for years to come.
I couldn't agree more. You've definitely given me, and I'm sure all our listeners, a lot to think about. This deep dive has been incredibly insightful. I'm amazed by how much complexity there is in something like banking, which we often take for granted.
It's true. Banking really does affect every single aspect of our lives. Understanding its history, the debates surrounding it, and the potential paths it could take is something we all need to be engaged in.
Absolutely. Well, on that note, a huge thank you for joining us for this deep dive into nationalization versus privatization in the Indian banking industry. It's been an eye-opening discussion for sure.
The pleasure was all mine. And to all our listeners out there, keep exploring this topic. The conversation is far from over.
Thank you for joining LexTalks. Be sure to subscribe for more deep dives into fascinating legal issues.